Greetings, everyone. This is an NCM farm equipment update. As we look out over 2026, everyone obviously is hoping for a much better year. And as you know, in the last video, we made a change in the way we're looking at the overall farm equipment sector. So we have farm equipment over 100 horsepower, and we have farm equipment under 100 horsepower. And what we're learning is they're very different buying segments. One is more commercial farming. The other's going to be more of what we consider to be utility farms or hobby farming. And I talked about and joked about the fact that I'm one of those folks who has decided to move out of the city. I got a small acreage and now I need a small utility tractor. I'm in that 100 horsepower, under the 100 horsepower category, but my income, my spending, my wherewithal has nothing to do with what's happening in the ag sector. And that's why we did divide it up. So in those tractors over 100 horsepower, when we look at the demand index, I think the best case scenario here is we're getting a flat signal, right? It's flattening out a little bit. The November index came in at 58.6, which is fairly flat against October's 58.8. It was down 0.3% month over month, was still almost 3% lower year over year, and we haven't seen that rebound in commercial farm spending. We know that commercial farm incomes still under a lot of pressure this year because of lack of exports, especially of soybeans and a lot of products that are going to China. um, but there's a little bit of hope and a little bit of optimism that maybe those conditions will improve. The Trump administration just approved a $12 billion additional subsidy for farmers who were hurt by basically the trade battle and trade dispute with China. And those payments should be going out sometime in Q1. We saw similar action early in 2025 with an $18 billion payout. I think it was ultimately ballooned up to almost 42 billion. This will be the second year of those subsidies, and it should help spur a little bit of spending in the marketplace. But what will really help, obviously, is when we see a massive change in what's happening with U.S. exports of grain. And that's kind of where we are. Unfortunately, we're still getting some of these negative and weaker signals overall for this demand index. As we look at industrial production, then we get what we expect. It's almost 5% lower year over year, just not seeing a lot of rebound. A lot of farm equipment dealers kind of keeping inventories a little bit lean. We don't see that surge in overall production and don't see that overall lift in brand new build out and brand new spending and build out, of inventories overall. So we're still watching that, not getting a strong signal there. When it comes to tractors under 100 horsepower, again, we need to look at a couple different things on the curve. This particular demand index does show a little bit of deceleration month over month between October and November, 11% lower, but still about 9% higher year over year. So we're still coming off of some pretty deep troughs. So for most dealers, moving anything under 100 horsepower, along with the implements and all the support components that go along with that, they're following a lot of brand new consumer trends that we consider to be rural trends. So a lot of consumers around the country, and you can look in almost every single market across the country, and you're seeing people moving out of dense urban populated areas, and they're moving into small acreages, anywhere from 2 to 10 acres, some as high as 20 acres, that kind of fit this under horsepower, or sorry, under 100 horsepower. He can say it, under 100 horsepower category of utility tractor. And then again, they're loading up on all kinds of implements. I use myself as another personal anecdote, personal example. But when I move out into the country and I need the utility tractor, I need the bucket on the front, but I also need a number of different implements that I don't have any of. It's not like some farmers who go out and buy a brand new piece of equipment. They've got the older implements to also be able to put to use with the new equipment. Many times, they've already got some equipment laying around. I don't have that, and so you can go on YouTube. You can see hundreds and if not thousands of videos of people doing the same exact thing I am and trying to understand the utility tractor market. And so that's what's happening. And as the Federal Reserve lowers interest rates, that's going to help spur sales. We see a lot of incomes in a lot of households that are in this category continuing to go up. And as I said earlier, we've got what we're calling the great wealth transfer that's taking place over the next, 5 to 10 years, where we're going to see over $18 trillion transferred between the baby boomer generation and younger generations. And many, many people are taking that new wherewithal and they are making that lifelong dream, if that's what it has been, to jump out onto an acreage and to start doing some, some tinkering, as I call it. And that's helping this category. So that's why we're getting these strong demand signals. They're not quite as strong as they were in 2019 and 2020, but we believe as we kind of get into the beginning of the year that this is going to go up and we're going to see improvement overall. Now, back to the commercial segment for a second. We watched the Purdue Farm Capital Investment Index, and it actually dropped a little bit this month. We saw it, we saw it cool a little bit, especially the capital investment point came in at 56, which is down about 6 points from October's level. And only 16% of farmers right now are saying it's a good time to invest. Now, this is October data. We know the Trump administration in November went in and approved this new farm subsidy. That's going to lift capital investment intentions, but I think we need to wait, excuse me, until January to look and see what's happened to the Purdue index. Let's look and see if that's lifted, look and see if that's helped overall change sentiment and get the commercial farmer out buying new 100 horsepower and above equipment. So insights and tractors over 100 horsepower. We've talked a lot about this, but really the demand is still remaining depressed. It was that way through late 2025. 2025 sales through November, we believe, hit about 15,900 units. Could be down as much as 23% from where we were a year ago. Those are estimates. We're still waiting on some final data there, but we know that inventory for this used equipment remains elevated. We think some of that inventory in some dealerships may be up as much as 30% year over year through Q4 in some parts of the country. So auction values are dropping faster than a lot of asking prices, kind of widens the spread there. But we'll see what happens with that 42 billion in payments for 2025 and what happens with the additional 12 to 13 billion dollars in 2026 and what that could do for sales and spending. So we've got a lot of high input costs still at the farm level, a lot of weak crop receipts, although we've seen some modest improvement with some notions of some new China farm or China grains sales and purchases. So we think we're hoping that we're going to see that improve. Unfortunately, a lot of OEMs are still looking at the 2026 forecast, and they're still seeing North American purchases at this rate at this point in time, based on what they know today, based on the geopolitical situation, that they think we're going to see some further declines in 2026. Again, what we see is we see it stabilizing, we see it flattening out a little bit, but longer term, we still have an annual growth rate of around 5 to 7% through 2030. And we'll see what happens. But some of those may be international sales, may not all be domestic. Under 100 horsepower, then renewed pressure in Q4. We know we saw that across a lot of different categories. We think that maybe the sub 40 horsepower tractor sales were down 25% in November, so maybe down overall about 8.6%. The utility segment, so 40 to 100 horsepower, I would even say probably under the 50 horsepower segment was more resilient. Still about 4% lower year to date. The mid-range utility segment remains a bright spot. So cattle market is still really that key there. And you see a lot of skid steers, a lot of skid steer purchases. We see a lot of that taking place. We also see the construction sector coming in and buying a lot of skid steers. Some of that will be sold by providers and dealers in this category. I know that again, in talking to a lot of construction firms down in Texas, they have built in pricing into all their brand new projects that allow them to buy a brand new skid steer per project, and then they retire it after that and buy a brand new one for the next project. And that's just for maintenance issues and the willingness of buyers to be able to fund that. But what that's doing is, and the flip side is something to watch, is that I did talk to a lot of CEOs who are now taking that equipment that they own outright that they have no debt against, and it's fairly new equipment. It's only going to be a couple years old with, not as many hours on it as you can put on them, and they're renting them out. And because of that, that may start to affect a little bit of new purchases for those jobs where people can go out and simply rent the skid steer and get what they need out of it. So just watch that a little bit. Um, Used values for these sizes have really done pretty well. I don't know. There's a lot of inventory in this area that's fallen about 22% year over year through November. So it's creating a little bit of scarcity. So we know auction values in that 40 to 99 horsepower segment was up about 1.5% year over year. Not fantastic, but it's a movement in the right direction. And so we think that the utility segment's going to outperform in 2026. So we think, again, everything happened in the cattle profitability, clearing of used inventory, and what I talk about the sales of small acreages in many communities actually still doing very, very well. I wanted to end with this data at the very bottom here. So migration data shows that we've had 430,000 residents in rural counties or move or migrate to rural counties since 2021. And a lot of that's remote work flexibility and families just looking for affordability and more safety outside of urban centers. And many of them will be potential buyers for a lot of these tractors. So I think for a lot of dealers, helping with education and helping them work through the process of knowing what they need for their size of acreage, what they intend to do with that acreage, those kinds of things are going to be important kind of moving forward. So overall, I mean, that's what I had for you this month. I mean, again, I think we're waiting on a lot of data. We'll look and see what happens with, again, the farm subsidies that's paid out by the Trump administration for next year and kind of get an idea of, what that means overall for the commercial over 100 horsepower segment. And then again, I think the underpinning is I think the under 100 horsepower segment is going to continue to remain pretty resilient overall. Again, so as I've said across many, many of the videos, I wish you all a very Merry Christmas. I hope you have a safe and Happy New Year. And here's to looking toward a better 2026 overall as a lot of these factors kind of converge. And hopefully we'll see an uptick in improvement overall in activity. So again, we'll talk to you on the flip side of things in January. All right, take care.